Hello friends, this is Raj Sastry from Raj Option Trading. Today is February 12, 2022. Hope you're all having a good weekend. Let's take a look at beaten down large cap stocks with a positive cash flow. I like these names because they have a lot of cash and they're generating positive cash flow and they're growing nicely. So with the top of the list, we got Facebook or Meta. Stock is beaten down big time and I think it's a great one to buy slowly. And then got Lilly. Lilly is a great stocks with lot of pipeline and lot of drugs in the pipeline. So at this time it's beaten down. Great stock to buy. And then you got Adobe. Adobe is a great company, creative cloud company. Great leader at the top with Shantanu Narayanan. So it's a great one to buy here. Then you got waste management. This stock has been chugging nicely and quietly doing very well. Right now it's beaten down and good to buy. And I like this financial company S&P 5 S&P Global stock is beaten down here. Still, it's a great buy. And then you got home builder Lennar, rock solid financials. It's also a good one to buy. So with that, let's jump in and get started. Look, let's do a quick market update here from Thinkorswim. So from a market update perspective, on the top we got 3 month 1 day chart. As you can see here, these are all 3 month 1 day chart. You will get a good idea about how the market is doing in the shorter time frame. Look, market is very volatile. Look, down and up nicely, down, up. So it's a volatile market, and I expect this to continue for some more time, especially with the Fed trying to raise the interest rate. This volatility will continue. It's a great time for the traders. And then you got your S&P 500, same story, very volatile. Right now it's coming down. Look, two big down candles here. We can expect this to touch and retest the lows here and then decide where to go. And same story with Nasdaq. Nasdaq is a little more weaker, as you see here. Two huge big candles here. It will also do a retest here and then decide where to go. And Russell is very weak, as you can see here. Small cap stocks are really taking very hardly, and we should buy some great quality ones here and go from there. And from a longer term, this is 1 year 1 day chart here. Look, stock market is really trying to test the lows here. It already tested one, twice, third time, and it might test it again and then take a decision where to go. So at the high level, we got a lot of turbulence in the market, mainly because it's led by Feds. Feds are going to increase the rates. Market is really um, afraid here. That's what's going on here. So with that, let's jump in here and look at what's going on in the broader market. Look, we got S&P 500. It's down sometimes, down again, down again, down again. Very volatile, as you can see here. Look, VIX is going higher. VIX is a volatility gauge, as many of you know here. VIX is touching 30 right now. So this you got to keep an eye on it. VIX can go still higher. That tells you, as VIX goes higher, market sell-off will continue. And then you got skew here. Skew is very low at this time, as you see here. It's one of the lowest in here. So that tells you stock market is really in a sell-off type mode here. So we got to be careful. And look, AUD JPY carry trade, that's also going down here. That tells you, they're dumping the high risk assets and really selling stock market here. So at the high level, as you see here, everybody is afraid of Fed. That's what's going on. Now let's look at bond market here. From a bond market perspective, look, bonds are trying to see where to go here. Right now, bond is getting sold off here. In the meantime, interest rate is going higher. As interest rates goes higher, stock market will take some hit here. That's what's going on here. Crude oil is going higher because there is a Ukraine instability. Russia might be attacking Ukraine. That's what's going on here. That's why it's coming down here. And look, we got gold going up nicely. Safe haven, that's what's going on to the gold. The moment there is some uncertainty, gold goes higher. So from a sector performance perspective, look, in the short term, we got 1 day, 1 month. Many of these high risk assets are low here. Look at technology here. Technology down big time. in 1 month, 1 day, 1 month. So it's a good time to buy some technology. Long-term story is still intact. Very nice performance in last 5 years. I would do the same thing for consumer cyclicals. It's also down big time, as you can see here. In a 1 day and 1 month, I would be buying some consumer cyclical also here. And then you can look at other names like healthcare. Healthcare is a great one to buy here. Sold off completely, so you should buy some healthcare and go from there. So with that, even communication services, look, it's a big time down here. Here I would say buy some quality stocks. You could buy Facebook or Meta, and stocks like Snapchat, Pinterest. Those will do well. So with that, let's jump in and look at some more details. Look, from a fear and greed perspective, right now we're in the fear zone. I expect this to continue a little more. We might get to around say 25 or 30 range here. That tells you stock will sell off a little more here. Previously, fear gauge was at 37. Now we are at 33. You could expect us to go maybe 30 next week, and it might even go a little lower, maybe 28 or 25. So with that, let's look at how is the fear gauge doing overall. If you look at the fear and greed here, just before the COVID-19, it was very greedy time. People kept on buying high risk assets, but COVID, look here, due to COVID, stock market fell off big time here, and it's of extreme fear. And from there we did very well, and we went to greed again, and then we came down and greed again. Right now we're in the fear zone. I think once we hit around 30 or so, we'll start going again higher. So that's what's going on here. It's really a pendulum swings back and forth, and as investors we got to invest when we hit around say 30 or so. That's a good time to buy and go from there. All right, let's look at some of these big ETFs and see what's going on here. From an ETF perspective, I love buying these big ETFs when they're down big time. My favorites are really S&P 500 QQQ. I also like IWM and DIA. Those are some of my favorites here. Also, I have a few more that we'll talk about in the next slide. Look, they're all down big time here. 1 day, 5 day. You could buy some of these ETFs like SPY and accumulate slowly. That's the way to go. That's the way to build the wealth here. Build the wealth slowly and go from there. And look, we got real estate here, real estate IYR. That's also down big time. You could slowly accumulate some real estate and they will do well long term. Right now it's in pain. That's why you buy some real estate. Look, utilities also down. RSI 39, good time to buy utilities and go from there. And next we look at a few more things here. Look, gold is very strong here. I would not be buying gold at these levels here. Let it cool off. On the other hand, you could buy beaten down areas. Look, we got XLC, which is communications sector, completely beaten down here. RSI 41. And then you got your home builders completely knocked down here. You could buy some great home builders. RSI 39 tells you it's extremely sold off here. That's a great one to buy. I had been buying XLV, which is one of my favorite here. As XLV falls off, I typically buy some XLV. It's a great one. They will do well long term. Look, they've done 329% in 10 years. And I also like both these areas here, XLK, XLY, and SMH, all great from long-term perspective. Look at the performance longer term. Right now in the short term, they are sold off here. Great time to buy them. And you could also buy some industrials here. Industrials are also sold off nicely. And look, RSI is 45, so you could buy some industrials also here. So with that, let's jump in and look at a few stocks. What I have done is I've looked at only large cap stocks, meaning market cap greater than 1 billion. It's not a textbook example of a large cap, but it's a market cap more than 1 billion. And I wanted to make sure there's a good free cash flow. These companies they have a lot of money. They are generating free cash flow. So you don't need to worry about these companies going out of business. And low RSI less than or equal to 40, that tells you these stocks are sold off, ready for us to buy. And net margin more than 10%, meaning these companies make money. These are not money losers. So with that, let's look at these names. Look, we got great companies. Top of the list, we got Meta or Facebook, and watch RSI here. All these RSIs are less than 40. That tells you these stocks are completely sold off here and good to buy. And Meta came down nicely. Look, they've been going down in 1 month, 3 months, and 6 months. And look, long term, they're doing okay. 5 year, 64%. Mark Zuckerberg has a plan here. He's going to own the metaverse. That's what's going on. He's investing heavily. And Facebook always invests very nicely and makes some progress at a breakneck pace, and they got a lot of money. As we see here, they got $47 billion cash. No need to worry about cash, and the debt to equity ratio is very, very low. That means they got a lot of money. And quick ratio, which is one of my favorite liquidity ratios, is 3.2. As long as it's more than 1, we are in a good shape. More than 2, we are in a great shape. So with that, Facebook checks out here. Right now, it's a good buy here, completely sold off here. And then we got Home Depot. Home Depot is a little crazy. The reason is, they have so much debt here. Look at the debt to equity ratio, 43, and look at the quick ratio, 0.04. They're not in a great situation. They have too much financial leverage, but they have done nicely. Look here, 5 year, they have done nicely. They got good amount of cash. I'm sure they got some long-term low interest rate debt, which may be okay here. So with that, I'm okay with the Home Depot here. We could buy some Home Depot. Look, RSI is 38, completely sold off here. One of my favorite is Pfizer. Pfizer is a turnaround story. They've done great. Look at the performance. They've done great here. And look here, RSI is very low here, and their debt to equity ratio is also very low. It checks out here, and stock is sold off. So you could buy some Pfizer. They will do well. They're coming up with vaccine for kids above 5 year old. That's going to be even better for the company. And then you got a few more, as you see here. We got PepsiCo and Cisco. Both checks out. And my favorite is Lilly. Lilly is sold off completely, as many of you know here. Look at the RSI for Lilly, just 40 here. And they got nice debt to equity ratio here, 2.2. That's good here. And look here, they've done very nicely. They got about $3 billion of cash here. No need to worry. You could buy this one here. And I like Cisco also here. Cisco has got a lot of cash, as you see here. They got $23 billion of cash here, and there is a rumor that they might buy Splunk. So that could be a great acquisition for Cisco. Cisco also checks out. You could buy some Cisco here. Look, RSI 36, completely sold off here. And one of my favorites, Adobe. Adobe is a great company, Creative Cloud, as many of you know here. And stock is down, RSI 39. Tells you stock is completely sold off here. Look, they got $5 billion of cash here. Very nice free cash flow in 12 months, trailing 12 months. That's a good position to be in. And then you got few more. Keep watching. And I like PayPal here. It's a good one here, completely sold off here. You could buy some PayPal. They got about a $9.5 billion cash, and they also bring in a nice free cash flow in every 12 months here, about 5.4 billion. Solid company. And I like SAP also. It's a German software company, enterprise software company. Look, it's also completely sold off here, RSI 36. And look, they got nice cash, $10 billion. No need to worry. That's a great one here. And I got a few more. One of my favorite is the BlackRock. It's a financial company, as many of you know here. Rock solid financial. They got a lot of great ETFs under their belt. Look, stock is sold off here, RSI 32 here, and they got a lot of cash. Look at $7.3 billion of cash, and they bring in money trailing 12 months about 4.7 billion. So one of my favorite, along with SPGI here, S&P Global. It's also a great one here. And look, they've done nicely in 5 years, 223%. Right now, they're sold off with low RSI. They got a lot of cash here, $6.5 billion cash. No need to worry. And look, we got Ford here, one of my favorite here. Ford is completely sold off here. And look, they got a lot of cash. They got $49 billion of cash here. And, from a liquidity perspective, debt to equity ratio perspective, it's okay. They got 2.9 debt to equity. Higher the better. I think they're doing better here. And ITW is one of those companies not talked about too much. It's a great one. You could buy this one also here. They got $1.9 billion of cash here. And look, nice free cash flow here. You could buy this one completely sold off here. So with that, let's look at a few more and go from there. Look, top of the list, we got Colgate Palmolive, and look, they've done about 34% in 5 years, and they have $958 million of cash. It's a good one, but my favorite is Moderna. Moderna has done great. This company has a lot of resources right now. Look at the cash position, $8.9 billion of cash, and they bring in about $11 billion of cash trailing 12 months. That's a great position to be in. And look at the overall score, nice overall score, 95. And look at the future growth here, nice future growth when it comes to earnings per share as well as revenue growth. And then got few more as you see here. My favorite is one of my favorite is waste management. This stock keeps chugging along nicely. Look at the 5-year performance, 124%. That's a great one here. And look, they got good amount of cash here. I mean, free cash flow is great. They do have some cash, $116 million of cash, not too bad. And we got a few more as you can scan through here, and keep watching the free cash flow and cash flow here. All these are rock solid companies. Look, we got Monster Beverage, one of my favorite here, and this company has been doing great. They got about $2.9 billion of cash here. Stock is sold off here. You could buy some Monster Beverage here. And we got a few more as you scan through here. Keep watching the cash position. All these are cash cows here. Look, we got Motorola. It's a great one. You could buy some Motorola here. And look, they have done nicely. In 5 years, they've done 202%. It's a good position to be in. And we got a few more. We got Nasdaq, one of my favorite here. It's also one of those financial technology type companies. Look, it's done great in last 5 years. They got some cash, $488 million. And you got Equifax and Lennar. Both are my favorites. You could buy those also. Look, Lennar has done great in the last 5 years, and it's got nice cash here, and it also has nice trailing 12-month free cash flow. You could buy that one also here. So with that, we got a few more with the nice performance, as you can see here. I would say even DLR, even Ferrari here. Ferrari has done great, as you can see here. Nice performance in the last 5 years. Stock is sold off right now, and they got nice $1.4 billion of cash. You could buy that one too. So with that, we'll wrap it up here. Thank you very much. Happy investing and trading. Please subscribe.